Hi YouTube, how's everyone doing? Just a quick video today about Boohoo, and it's now the time to invest. It's like the fourth one in the series, or fifth one in the series so far. I've covered Nike, I've covered Naked Wines, I've covered Train Line, and the last one I did was Best of the Best, which is a current investment of mine. And I'll be going through Boohoo today. It's a well covered stock on YouTube. It's a well known stock across the world at the moment. It's always in the press, normally for bad news. This is my channel, the DIY Investing Guide. Just ask if you're new to the channel, could you subscribe to the channel? And please smash that like button to help the channel grow and get this video out there. There will be a link in the description for a free share with Freetrade. Just if you're new to investing, just sign up using the link, deposit £1 in your account, and you can get a free share worth between £3 and £200, which is a great way to start investing. Yes, so today I'm just going to be going through Boohoo. Obviously, I do own this stock also, as I did own Best of the Best. Just put a disclaimer out there, I'm not a financial advisor. This isn't advice to buy or sell. Please do your own research. This is just my own personal opinions and how I've researched the company and my analysis on the company and the checklists I use before I invest in the company, and obviously how I've done a stock valuation on the company. So today I'll just be going briefly outlining what the company does. We all know, obviously, it's well documented. It's had its bad press in the news with the Leicester sweatshop scandal, with obviously anti-slavery laws and people being paid far below the minimum wage. And obviously, there's fears that that's still happening, and it's a problem in the industry, not just for Boohoo, in the sweatshop industry, especially in Leicester. And I think Boohoo are doing as much as they can, but obviously they've been tarnished with that now. So every little bit of bad news they get pounced upon. I've also had a bit of bad news recently in the press. Obviously they've been sued for £100 million lawsuit over misleading with prices. So they inflate the prices of products. So they've been accused of inflating the prices of products and then putting them at a discount to make it look like a better deal than it actually is. It does seem a bit suspect to me. It seems a bit like staged, like the person has emails and stuff. So it feels like he sort of went in with the intent of suing Boohoo before he even brought goods from Boohoo. But that's my opinion. That's what I've took from it, because I haven't, that's all I've read. And I think once it's resolved, the share price might kick on a bit. So that's another thing. So there's been a bit of a pullback, obviously, in the price due to the negative news, and there seems to be every 6 months or so that happens with Boohoo at the moment. It's the third time in the last 12-18 months that this has happened now, and I think a lot of investors are getting fed up with it, to be honest. But that being said, it still is a quality company, and I'm going to get into it now with my analysis of the company and work out if now is the time to invest in Boohoo. So let's get through it then. First of all, we'll just do a quick outline of what Boohoo does. The company is basically a fast fashion company that designs, markets and sources and sells its own clothing brands. It has many brands, obviously, as you can see at the side there. It's got Nasty Girl, Debenhams, Pretty Little Thing. It owns Dorothy Perkins now, Wallis, Boohoo, Burton, Karen Millen. He brought a lot of these brands that were failing on the high street, and he's taken them to online only. I know it will be selling clothes in Dubai and places like that, and Saudi Arabia in Debenham stores, but all the stores in the UK have been closed, and he's just took the brand and the name on. They use a test and repeat model. It's where it produces small batches of lots of new styles with the ability to ramp up production quickly for the best selling lines, and obviously for the most likes on Facebook. It uses social media well to gather what's going to sell well, and then it ramps up production and you can get them quick to market. And the thing is, because it's fast fashion and it's quite cheap, that's where the problem is. A lot of the fabric people, makers and the sweatshop owners are saying that they can't afford to sell at them prices. But that being said, if fast fashion increased the prices of the products, which they could do, and obviously that might take a hit on sales, because what people like, the consumer like, is getting it quick and getting it cheap, latest trends. I think that's just a cop out. I think some of these sweatshop owners, their moral character isn't the highest, and I think they would still not pay the minimum wage. Some of them, well, hopefully not the ones that are Boohoo are going to be dealing with in the future, but they'd still be paying below the minimum wage, even if the prices, even if they could get more for their product, because I just think they're greedy and they're not very good. They're dishonest people, basically. And hopefully Boohoo can weed these people out now going forward. They've done everything they can at the moment, and eventually in the future I think that Boohoo will move to be manufacturing their own goods and products as they get bigger, and that obviously the company gets they can rely, as the company gets bigger, they will be able to source their own products, and they'll be able to move it to even manufacturing their own products, so they won't need to rely on these sweatshops anymore for cheap garments. Obviously with Debenhams and stuff like that, it's already moving out into different sectors, and obviously Debenhams doesn't just do clothes, it does homeware, furniture, all sorts of stuff Debenhams does, and I think that it's going towards that way of like a whole e-commerce market, as similar to sort of Amazon and an Alibaba, but with mainly clothing and homeware and stuff like that. So it's definitely a long-term hold. I think you're going to have plenty of ups and downs with this stock in the short term, especially with scandals and stuff like that. I would hope that the management could improve the way they deal with the media and hopefully these corporate governance and stuff like that. But they've got the agenda for change, and it seems it's not going to happen straight away, and everything's not going to be sorted straight away, but eventually it will be sorted. Obviously, I think this lawsuit will go away eventually, even if it's just a settlement. I think once that's out the way, like with Alibaba and Facebook, once these things are out the way, the share price seems to take off, and I think the same will happen with Boohoo, because it is a quality company as far as I'm concerned. And obviously they also utilise social media and celebrities and influencers pretty well with their clothing and stuff like that. I know Jack Grealish, current England star, is very popular with the ladies and the football fans. Plays for Villa. Is he going to Man City at the moment? He's a big ambassador of Boohoo Man at the moment. So yeah, it's tied to a lot of famous people and influencers. So that's pretty much how it gets its products across, and sells its products, markets its products towards younger audiences, especially millennials between the ages of 16 and 30. And I know a lot of people that use Boohoo, Pretty Little Thing. They order a lot of clothes off there. And they don't really look at the news and the media. They just think, I want to buy some cheap clothes and get them quickly sent to my house. I'm going out tomorrow, especially with the market, with the economy reopening, clubs and parties and stuff. And summer, people are wanting to buy clothes cheaply and quickly. And the latest trends and fashions. Obviously, it's very linked, a lot of Love Island advertising with Boohoo as well. So yeah, that's basically what it does, and it can make a decent amount of money, and revenues have been growing fast for the last five or so years. So we'll move on now. And obviously here, I've got my 5 checklist numbers that I used in my previous video. Obviously I'm using this format now to show my research and analysis of a company. I use tools online, Simply Wall Street, Yahoo Finance, and these are the 5 criteria that I look at, the 5 big numbers that I look at before investing into a company. So obviously I'll get the story first. If I like the story, I'll have a look at the numbers. And the 5 big numbers are return on invested capital, sales growth rate, equity growth rate, EPS growth rate, and cash growth rate. And ideally I'd like them all to be above 10%. So if they're above 10%, then I know it's a decent investment. So I'll do this checklist first, and then if it hits these, then I'll go on to evaluate the company if I like the story of the company. Obviously debt's something I look at afterwards, and I find that companies with good 5 big numbers have little to no debt, and as with best of the best, Boohoo also has no debt. Obviously, as you can see, its return on invested capital is 25%. It's nearly 19% for sales growth rate. This is over the last 5 years as an average as well. I've done it as an average. EPS is 25%, equity growth rate is 52%, and cash growth rate is 35%, which shows it has quality earnings. So yeah, and it has no debt. And then obviously there's the chart from Simply Wall Street showing its projections going forward as well. And then finally, I do a stock valuation on the company. Boohoo At the time of making this post, the share price was £2.76. I think it's a little lower than that now. It's about £2.60 a share. I bought some more last week at about £2.50 a share. And yeah, I use one of the growth rates I use is equity growth rate to work this out. You can use the EPS. The EPS is a bit lower, it's 25%, so it probably would give you a bit more margin of safety. But I've used the equity growth rate for this analysis. And then obviously the current PE ratio is 38, but for growth companies in this sort of sector, I use its average of the industry, which is 25 for its 5-year PE ratio. So that's how I use the calculation. Its current EPS is 9 pence a share, and then obviously my minimum rate of return is always 15% because I double my money roughly every 5 years then. So yeah, it's 5-year EPS. I times that by it's the equity growth rate 5 times, and that gives me well, I've done it for the 10-year EPS on this one. No, I've done it for 5 year. It says repeat 10 times, but you should repeat it for 5 times, and that gives me 0.72 pence after 5 years. Roughly, that's where the EPS is looking at if it continues its current growth. And then I times that by 25 for the PE, and that gives me a 5-year share price of £18 per share. And then obviously I divide that by 2 because roughly I want to double it every 2 years with a 15% return, and that gives me a current price of £9, which I'd say was fair value from my calculation, of £9 a share. So then for margin of safety, I half it for £4.50 a share. So if you look at the current share price, it's well below the margin of safety. It's telling you to load the truck up. But then again, I have used the equity growth rate, which is quite high. But then, so say I use the 25% EPS growth rate, and that still gives me roughly, you know, anywhere between £8 and £9 share price in 5 years' time, which would still be a 3-bagger at the price, 3 times your money at the price it currently stands at, which is well below the 15, which is much better than the 15% return, which would only double my money every 5 years. So at the moment, I'd say it's margin of safety. It's a quality company. It hits all the growth numbers. It has no debt, and I'm going to be buying this company. Please drop your thoughts in the comments below on what you think of Boohoo. Do you think it's too risky? Do you think that, you know, the company it has too much bad publicity? Or do you think it's an absolute bargain also? Do you think it's a quality company? Would you invest in the company? Would you not invest in the company? Do you agree with it being unethical? Or do you think that it's not really that their fault, and that, you know, it's a good company to invest in for your future? I love the company. I like the company. And it's one of my bigger positions in my portfolio, and I will be investing in it going forward, and I will be holding it for the long term. So yeah, please like this video if you've enjoyed the content. Smash that like button and subscribe to the channel if you're new to the channel, and obviously drop your thoughts in the comments. Thank you for watching the video. I hope you've enjoyed it, and I'll be doing a portfolio update later in the week. Thanks a lot. Have a good day, guys.